I'll tell you what, let's very quickly go into PwC economist Xhanti Payi. He joins us now. Xhanti, thanks very much indeed for talking to us. I suppose, taking into consideration yesterday's inflation number, a slight ease in inflation, a lot of us said, well, maybe the Reserve Bank will just have a little bit of mercy, hike rates, but perhaps by 25 basis points. The picture he's painted here is of such an upside risk that you can see why he's shocked and said, well, it's a 50 basis point hike. This is going to hurt.
That's definitely true, and good afternoon. I think one of the things that we had really been discussing and really at PwC we worried about was that core inflation. Remember, he talks about core inflation, which really is a much more spread out level of inflation rather than that headline, which includes, of course, energy and food prices. And there he says, the main concern is that this then becomes at some point entrenched, because one of the things that will happen is that many people look at this and say, well, we can see food coming down. But if that core inflation is not actually coming down, that's the main worry, because then that means that the economy almost has a built-in sort of inflationary pressure that lasts much longer. And I think it's connected to what you were just talking about with Braden now, that is about the future, the concerns that they have around expectations of inflation, where then we also bake it into our salaries, we bake it into our plans in terms of whether it's business and pricing for businesses going forward, and that lasts for a much longer period. And what you are saying is that concern for as far as for them is very, very important. And so I think that's the main thing that has pushed them so far.
Yeah. Now, let's just talk about the differences of this inflation figure between South Africa and the rest of the world. You had a question come up there saying that, look, elsewhere food inflation seems to be taming. In South Africa, we've got what the governor often calls idiosyncratic factors that lead to inflation being stubborn. For one, I would imagine, and you'll expand on this, we've got load shedding. We've got a currency that's very weak. When we import, those prices still stay high. So we've got a very unique situation with inflation in this country. And one asks, well, who's accountable for that?
That's a very, very important question. I think one other question, which we've also heard about, has been, I guess, the weather patterns, the effects of climate change and how that really is affecting really the kind of the produce or product that we're getting into markets. So that pricing has also been quite important. So those three factors, as you mentioned them, are very, very important. I think on the production side, that has been a very, very big thing. And I think that's what you're alluding to, the kind of work that needs to be done to be able to actually not to import as much. Many countries obviously have had the opportunity to wear down some of those problems in terms of the logistical issues that emerged from COVID-19. They've had time to wear out some of the problems from the shocks from Ukraine and Russia, those bottlenecks, the input costs. We still obviously are stuck very much in the volatility of the currency. We're still stuck in the inputs, oil, and all of those things. And as you mentioned, obviously, many of these farmers have also complained around the costs, the input costs, because of having to spend more on issues like diesel, and then, of course, trying to buy in some of this stuff. So we are, and that seems to be something that will be elevated and will be with us for some time. The question you're asking about whose fault it is interesting in the sense that, of course, as the governor always says, we need to work harder at taking out some of those structural problems that are in our system, whether we're talking about issues around, primary sector in agriculture, and, of course, the secondary sector in the agricultural sector, the manufacturing or the agro-processing, where finally food actually reaches our tables. All these factors are important. Perhaps what is also interesting, maybe one has to think about, is also some of the impacts. We had this question about how far can this happen if it does not restrict the economy. That may very well speak to, for example, opportunities for farmers to be able to borrow, to expand their production, for people to be able to borrow, to participate in the manufacturing of food, all of these things which could help lower the prices on more of a longer term, and perhaps in some instances quickly. So those factors are all important.
Xhanti, I've got Braden with me. I just want him to pose a question in a second to you, but just before he does that, let me ask you this. The governor also spending quite some time speaking about the cost of our borrowing in the forms of bonds, right? He's saying that it's shot up. I mean, that risk premium that he's talking about, which is essentially the interest rate. I mean, 13%. It's hitting 13%, saying that investors are seeing our country as more riskier than ever before because they're asking for more interest when they lend us money. That's a very, very important point he's making, saying that we've got to get something right here because investors are looking and they don't like what they see. Hence, their payments back to them is higher.
Sure. I mean, there may be two issues here that we see. The one is probably related to the grey listing. One has not seen, it's very difficult to tell. But certainly one of the other things the governor mentions is the restrictions or the demand for credit, not just in South Africa, but globally. Now, remember, we compete for capital with our global partners in the US, in Europe, where we've seen that they also need a lot of money to fund their budgets. So as we need money to fund budgets, we need rands to fund our local budgets. They also need, and so sometimes you see then that demand for the money, and of course being higher risk, maybe that premium that you are seeing that says, well, because you're obviously an emerging market, you are riskier now that we're seeing you in terms of all these developments that we've talked about, and that this money could actually go somewhere else, and that's demanded. Perhaps we should charge you a higher premium. Those kinds of factors are also very much at play.
Xhanti, it's Dan here. Good afternoon. Just a quick one. The governor was very clear in saying that this is a start of a restrictive kind of approach. I've seen a report already since the announcement by the Reserve Bank that this is a 10th increase in 18 months that we've seen in the repo rate. And of course, now the prime lending rate from commercial banks is going to be 11.75%. If you had to cast the Xhanti crystal ball, are we at the end of that hike cycle, or should we brace ourselves for more?
We think what he was really referring to, so we think that this is probably the last one in this cycle, given that there was another 50 basis points last time, that the data that's coming out, the economic data is very, very poor. And we're likely to see when we get the GDP data next month, before they sit, probably data that says we are in now a technical recession, as it's usually called. But more importantly, one of the things he's referring to is saying, before we were not restrictive because they were doing what they call normalizing rates. So bringing them back where they have been in terms of what the Reserve Bank will talk about, the long-term rates, normalized rates. Because remember, we had spent all this time with lower interest rates when we were trying through COVID to sustain the economy and to make sure that we stimulate the economy. So they had this period of low interest rates, and they started the cycle saying we are normalizing. Now they're saying, well, now, if you think about it, we have just now moved from that normalization level, and we are now getting up to a stage where we say, now it's restrictive. So before they said, look, we spent all these years more relaxed in terms of interest rates, and then we normalize them. And these increases that now you're seeing are actually now becoming restrictive. And that's, I think, where it is. But certainly we think it's difficult to see that for the remainder of the year, you could see much more than this. It is now probably then to look through it, because remember, he also talked about the ability of looking through the shocks. Because what we expect now, these risks that we're seeing are likely things that will be shocks to the economy rather than things that are actually things we don't expect. So load shedding we expect is part of the system now, and it seems to be built in, and all of the stuff. We talked about logistic problems. Those are now things that we are in the system with. The things that will shock us will be probably with what will push inflation higher. And for those things, he suggests that we will look through them.
Xhanti Payi, as we let you go, just one final one from you. I mean, you look at the middle class at the moment in South Africa, and 8.25% repo rate and a higher prime rate at banks. You've got the middle class owning vehicles, having bonds on their property. What do you think, the consumer impact is going to be on this? We're going to have a very, very tighter financial status of the middle class in this country after today's hike, isn't it?
Sure, and actually all classes. I think one of the interesting things about this, and we've seen, something we've been talking about around, we've looked at, at PwC, we released a study on actually consumer behavior. And we are seeing that actually as much as 50% of consumers have started switching out of unnecessary expenditure. So people are saying, look, we are rather under a lot of strain at the moment, so let's switch out and only focus on those things that we actually need, because we have seen the numbers. And they are quite clear. Those numbers are coming out through retail sales, for example, where those have declined, car sales. So certainly a lot of consumers are under a lot of pressure, and we know that the inflation is a problem. They certainly also we haven't returned to the jobs that we lost pre-COVID. And so we know households don't have as many workers as they would have had pre-COVID. So all of those pressures coming together tell you that real incomes are under a lot of pressure. Disposable income, therefore, has also been under a lot of pressure. And so certainly in the way you describe it, we are all of us are under a lot of pressure. And hopefully, and I think the governor also spoke about it at the beginning, that pressure is quite immense. And that has obviously will have an impact, eroding impact into the economy, given that, of course, we need to be buying things in the economy to keep it going.
If you think the numbers were tougher last month, they've just got even tougher, according to Xhanti Payi there. Well, there you have it, Devan Murugan. Now we know what to install. I'm sure you're going to do more analysis throughout the afternoon and the evening, talking to more people in terms of what the Reserve Bank governor has just announced. Well, if you've just joined us, well, there you have it. The repo rate has gone up by 50 basis points. And we just finished some analysis there with PwC economist Xhanti Payi. Devan Murugan from our money desk, he's going to be preparing to get more reaction for you and discussion throughout the afternoon, especially about the impact of this latest aggressive increase in the repo rate. Ouch! Money has just become that much tighter.